This is Craig Haugard with your Financial Issues Ag Update. Corn had a sharp turn lower right alongside the rest of the commodity and financial complex yesterday as markets reacted to the coronavirus headlines. Weekly export inspections came in at 26.3 million bushels. We continue to fall behind last year with export loadings market year to date now running 449 million bushels behind last year. As I record this, the overnight spot corn futures are trading a penny lower. Soybeans fell sharply in response to the expansion of the coronavirus in China. The number of infections more than tripled over the weekend, and the travel restrictions that were imposed during one of the biggest holiday travel periods for the Chinese culture has markets worried about the impact on economic growth. Now, the longer-term impact on China's demand for grains and oilseeds is probably unaffected, but the short-term panic can certainly have a negative price impact. Weekly export inspections came in at a solid 38.2 million bushels for the week. Looking at South America, their weather forecasts continue to indicate a good weather pattern for growing a sound crop this year, as it appears we're still on pace for a record South American crop. In the overnight trade, we have spot soybean futures trading 7 cents lower as I record this. Wheat stumbled coming out of the starting gate yesterday, but then did what corn and beans couldn't do and rallied the remainder of the session. The news that China had elected to purchase Australian wheat over U.S. origin wheat was a blow to the bulls over the weekend, but the fundamental notion that world values are rising brought the idea back that a rising tide raises all ships. U.S. hard red winter wheat FOB values are now at a slight discount to the Russian equivalent, as Russian values are now at 9-month highs, and that should bode well for our export story. Now, weekly export inspections this week were ho-hum at 8.2 million bushels, but year-to-date export loadings are running 77 million bushels ahead of last year. In the overnight trade, we have Chicago 2 cents lower, Kansas City is down 4, and Minneapolis is trading a nickel lower. Cotton futures gave us a wild ride. After opening sharply lower and posting nearly a $2 trading range, the March futures managed to close 11 points better as they settled at 69.51. In the overnight trade, spot futures are very quiet, just trading 2 points lower as I record this. Fear of the impact of China's coronavirus was front and center in the livestock futures markets yesterday. The Chinese public's concern is reminiscent of prior SARS and bird flu events, both of which resulted in slowed Chinese travel, restaurant consumption, and a general slowdown in commerce. For the day yesterday, we had April live cattle futures down to $3 limit, March feeder cattle were down to $4.50 limit, and April lean hog futures were down to $3 limit. We're going to have extended limits in all three of those markets when trading resumes today. Class 3 milk futures took a hit yesterday, with February futures finishing the session 67 points lower, settling at 17.33. In the overnight trade, we have spot futures trading 7 points higher. Cash livestock markets closed lower for the session. At the close, we had choice beef boxes 90 cents lower to close at $213.59, while selects were down 20 cents as they settled at $210.50. Pork carcass values were 12 cents lower as they finished the session at $77.26 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.